Greater Manchester Chamber of Commerce, and for hosting this webinar today. It is on, as Jaleva said, VAT Triangulation in the post-Brexit world. My name is Mark Sevitz. I'm the Managing Director of the UK branch, of the branch for UK and Ireland at Retrade, powered by VAT IT. I'm joined today by my colleague Simeon, who will be talking about triangulation, and I'll leave it for him to introduce himself. And he represents our product development and research legal team. So he has a wealth of knowledge within the legal space, within the VAT space, and specifically on the triangulation area specifically. And here we hope that you'll be able to learn something today, be able to take some knowledge back to your businesses. Please feel free to ask any questions later on in the Q&A session, which we'll open up. But as a starting point, just a very brief introduction and the agenda, what we'll look at today. Just briefly, who is VAT IT and Retrade? What is VAT Reclaim really all about? So that obviously speaks to triangulation. And then Simeon will be going through the triangulation, what it means in the VAT world, how businesses can take advantage of triangulation and those simplification methods within intra-EU trading. And then I think probably most importantly, now that the UK has left the EU, try and take advantage of triangulation and the benefit that the simplification offers. And then very lastly, we'll just touch on our single solution for the post-Brexit trading world and how businesses can achieve trade continuity. So just very, very briefly to touch on what is VAT Reclaim and why is VAT Reclaim important, and who we are as VAT IT. We're the leading VAT Reclaim business globally with over 20 years experience. We really specialize in the ability to recover VAT, to guide businesses along VAT Reclaim and their VAT compliance. And we do have 1,000 employees globally, as well as representing over 13,000 clients around the world as well, in 60 countries where VAT is applicable. But more importantly, what is VAT Reclaim? VAT is obviously charged on the consumption of goods and services and imports in the particular country. So where we're going around to shops, etc., purchasing within the businesses, we pay VAT on those transactions. But there is the ability to recover this VAT or to simplify the VAT processes so that businesses themselves are not actually out of pocket. And that's been encouraged by the EU particularly, and of course the UK, when it was still part of the single market and customs union. But essentially it allows for foreign businesses to trade and to work within the EU and various other countries around the world, but not to diminish their ability to do that work. So not to add on those expenses. So to encourage that investment in trade, and of course to be able to assist businesses in being able to conduct that trade without an impact to the cash flow. And unfortunately, in our experience and what we know from surveys and globally, most companies assume that this VAT that is charged on those business transactions, whether it's in their country, their domestic country, or whether it's in their foreign country, so they're trading internationally or traveling internationally, most of that VAT is lost as a sunk cost. And just briefly, the benefits of looking at VAT Reclaim is obviously to boost cash flow on those goods and services. There is a cash flow lost in a lot of cases on global trade and global travel. 60 countries around the world, over 60 countries allow this sort of reclaim. And in the highest VAT rate in the EU is at 27%, obviously 20% here in the UK, post obviously the COVID relief into next year. But those travel expenses, those AP expenses that businesses are incurring, they obviously, if the VAT is not able to be recovered, that does represent a cash flow lost. And in some countries, you can go back more than 5 years, or up to 5 years, in order to recover that VAT. So really, VAT recovery and VAT reclaim represents a significant cash flow boost and a significant opportunity for businesses to be able to trade effectively and consider their business conducted globally. So just around VAT IT, our global presence where we're able to offer services is within 38 offices around the world. Our headquarters is here in London, and we work quite closely with the Chamber of Commerce to be able to provide services to the different members. We are a strategic EU exit partner of the Chamber, and we do work with a lot of chambers in the Department of International Trade as well. So just very briefly about Retrade and VAT IT. There's going to be a second poll, which Jalevis is going to run, and then I'm going to hand over to Simeon to introduce himself and to talk about triangulation.
Thanks, Mark. So I'm launching now the second poll, and we would like to know what have you considered in terms of customs with the EU, whether you're doing your own customs declarations, are you using an existing customs agent, are you looking to appoint a new customs agent, are you still undecided? We'll give just a couple of seconds for everyone to answer, and then we will share the results. Right, so we do have 55% using their own systems customs agent. We have some companies doing it themselves, and some who are still undecided and looking to appoint a new customs agent. Thank you very much, and I pass it now over to you.
Yeah, good afternoon, everybody. My name is Simeon, like Mark said, Simeon Adebolajo, and I head the research and development at VAT IT. And my work solely focuses on some of the legal issues that come as a result of cross-border transactions. And I try to find solutions to those problems and how to assist business facilitate their cross-border trade without with as minimal interruptions as possible. Today, we're going to go through a very interesting topic in EU VAT law called triangulation. And simply, triangulation is a simplification that is applied to a specific type of intra-EU cross-border sales of goods. And the purpose of this simplification is to reduce the compliance costs which is associated with such transactions. And the specific, the transactions are called ABC transactions or triangular transactions, and it involves three parties, three VAT-registered parties, each located in 3 separate EU member states. And there are 2 transactions, 2 sales, and 1 transport. So what happens is you have member state 1, 2, 3, you have party A, B, C, party A sells to party B, party B subsequently sells to party C. However, there's a single transport of goods from country 1 to country 3. And so if you were to draw that on a sheet of paper, it sort of looks like a triangle of some sort. And that's why it's called triangular transactions. And before we go into the mechanism of the simplification, I thought it was best for us to discuss some EU VAT principles so that just to give us a bit of context and understand why the simplification works the way it works. So one of the principles in EU VAT law is that we want to try and levy VAT in the country of consumption. That principle is called the destination principle. So wherever the consumption of a good or a service is being used, that is where we want to levy the VAT. And this is encapsulated or sort of covered in Article 40 of the Principal EU VAT Directive, which says that the place of supply of an intra-EU acquisition will be the place where the transport ends. So if you have to use an example, say you sell goods from Germany to Spain, Article 40 says that Spanish VAT will be levied on that transaction. And what that means for us is that from the German perspective, we can't charge German VAT, it becomes 0 rated in Germany, and then we charge Spanish VAT because the transport and the acquisition occurs in Spain. Again, Article 200 of the directive says the same thing, that VAT shall be payable by the person making an intra-community acquisition of goods. Now, the implication of that is if the person making the acquisition is not registered in the country of acquisition, then in order to pay the VAT, that entity has to be registered for VAT in that country of acquisition. And what that means is that that's an added administrative procedure that needs to be carried out. You need to get a registration, possibly get a representative in that country, and that obviously leads to some increased administrative and compliance costs. Okay, so when does the simplification apply, and what are the circumstances that must be present for you to take advantage of that simplification? Article 141 of the directive lays down the conditions, and I've summarized it. It says that there must be 3 parties, A, B, C, which are registered in 3 different EU member states, 1, 2, 3. And like I said earlier, party A sells to party B, which in turn sells to party C. And it's important that the acquisition by B from A rather, is made solely for the subsequent supply to party C in member state 3. and the goods move directly from Party A in Member State 1 to Party C in Member State 3. When will the simplification not apply? I guess by inference, you can sort of start to determine when it will not apply. For instance, if the intermediate supplier, which is Party B, is VAT registered in either the originating country or is VAT registered in the destination country, then the simplification will not apply. And we're going to use some member states just to illustrate the point in the next couple of slides. Or if one of the parties in the transaction is from a third country, so say from China or from the US, they're not part of the EU, then the simplification will not apply. And finally, if the goods are not physically located in an EU member state, so say you bring in the goods from, again, China or the US, then the simplifications will not apply. So this is the example just to illustrate how the simplification works. I thought it was best to understand how the VAT treatment would occur if the simplification doesn't exist. And with that, we can start to see why it is necessary for us, for this simplification to be in place in essence. So the example we're going to use today is we've got a VAT registered supplier in Austria selling goods to a VAT registered business in Bulgaria, who subsequently sells the same goods to a VAT registered business in Croatia. So we've got our ABC countries, and the transport essentially moves from Austria to Croatia. Because the first supply is between the Austrian business and the Bulgarian business, and the acquisition is taking place in Croatia, essentially the Bulgarian business acquires or becomes the owner of the goods when they land in Croatia. According to Article 40 that we mentioned earlier, Croatian VAT is due because that is where the acquisition actually occurs. And then in order to pay that Croatian VAT, B has to register. Once B is registered for Croatian VAT, the supply that it makes to C in Croatia is a domestic supply, because it's essentially two Croatian VAT numbers making sales between themselves in Croatia, and then B would charge C Croatian VAT, and that transaction goes that way. But the problem is the fact that the Bulgarian business has to register in Croatia. Again, like we mentioned earlier, the increased cost of having to maintain a VAT registration in a foreign country and filing returns, etc., etc. It's hard enough doing it in one country. Now think about doing it in multiple countries. Do you want to mark the next slide, please? So what the simplification does, where it comes in, is it removes the need for Bulgarian business to register in Croatia. And essentially how it will operate is that the Bulgarian business will provide to the Austrian business its VAT number, showing that, okay, I'm registered in an EU member state, that is my VAT number. The Austrian business will issue a zero-rated invoice to B. So there's no VAT charged on that transaction in essence. The goods subsequently will move from Austria to Croatia. B acquires the goods in Croatia. B makes a supply to C, to the Croatian business. However, the VAT on that transaction becomes reverse charge. And I know we say reverse charge all the time. Essentially, it means we shift the obligation to account for output VAT from the seller to the buyer. So B is the seller in the second leg of the transaction. C is the recipient. We shift the responsibility to account for VAT onto C. And we must remember that the VAT that is being shifted is actually Croatian VAT, like we mentioned earlier. Now, because that obligation is shifted, B doesn't have to register for VAT in Croatia. And what will have to happen is B will issue an invoice that shows the VAT number of both parties, essentially the Bulgarian VAT number and the Croatian VAT number of the recipient, and essentially notify C on that invoice saying that I'm conducting this transaction under the reverse charge. Please interact with your tax office and report that VAT to your tax office. And this sort of dispenses with the need to register for VAT in Croatia, in the example that we're using. And this could be any of we just used Austria, Bulgaria, and Croatia to illustrate, but this could involve any of the 27 member states of the EU. It could be Spain, Germany, France, or whatever the case might be. But the important thing is that it removes that need to register for VAT in another country. Mark? Okay. And I guess this is the important, we've gotten to the important stage. What does this mean for UK businesses now that we're post-Brexit. Pre-Brexit, when the UK was part of the EU, in essence, the UK would have been able to take advantage of that simplification because, as I say, the triangle becomes complete. We still have 3 VAT numbers, EU VAT numbers, assuming the UK business was the intermediate party, essentially B in the transaction. However, post-Brexit, the unfortunate thing, or not really unfortunate, but the reality is that UK businesses can no longer take advantage of the simplification. It's no longer available to UK businesses. So therefore, to the extent that a UK business is making supplies, a triangular supply, if it's the intermediate party, it will have to register in either the originating country or the destination country and account for output VAT or reverse charge, depending on which of those countries it registers in. If it registers in the originating country, essentially that would be the first transaction would be a domestic transaction. And then the next one, the subsequent transaction will be reverse charge because that's where the acquisition takes place. So it would depend on where you register, either you register in the originating country or the destination country, output VAT or reverse charge. However, if a UK business decides they want to get an EU VAT number to take advantage of the simplification, it is important that you look at your trading partners and ensure that where you have your VAT registration is not in either country, either the originating or the destination, because if you're registered in either one of those two, the simplification will not apply. You need to be registered in a third country different from the originating and the destination country. It's very important because those are some of the, like we mentioned earlier, the requirements that are required, the requirements for the simplification to apply. So it must be registered for an EU VAT in a third country. Mark? Yeah. So essentially, just to summarize again, before we go into the next stage of the presentation, triangulation is a simplification that applies to what are called ABC transactions, or triangular transactions that involves 3 parties, 2 sales, and a single transport of goods. And essentially, it removes the obligation to register for VAT in either the destination country in the destination country. And I hope that with this, we'll be able to explain how it is and how it works. It's a little bit convoluted, but once you understand why it operates the way it operates, it becomes more simple, and we can use the simplification and take advantage of it. Thank you, Mark.
Thank you, Samir. And I think we'll obviously open up Q&A just now, but I think that really leads into just the very last point from our side around the supply chain. Post-Brexit, it's exceptionally important to understand what UK businesses need to do from a VAT perspective, and that those simplification measures are not necessarily available still, and whether the administrative burdens and the extra costs are actually quite prohibitive in terms of, as Samir says, around registering for VAT in other countries. So what does that look like on the supply chain? So Retrade and VAT IT, we do have a one-stop shop supply chain a management process, a solution for businesses who are trading into the EU, again, working closely with the chamber. And essentially what we do is just to understand, including the triangulation issues that arise and those reverse charges, is to present a solution that really looks at the cost-effective, compliant and efficient manners of that trade into the EU, but really marrying the customs, logistics and VAT, and understanding the short-term goals versus the long-term goals. What are the priorities of businesses and how best to take advantage of the, let's say, the new trading situation between the UK and the EU. So for businesses that are really thinking around VAT returns and registration, import of record, Incoterms, import VAT, all of those sorts of things, this is where Retrade and VAT IT can assist, and especially, as to Simeon's point, on the difficulties related to triangulation. So we offer a free consultation, and there is a discount available for Manchester Chamber of Commerce members, and that's something that we can discuss. We offer a free consultation. Obviously, we'll send out the details through Jalevis as well, where one of our consultants and industry experts will be able to guide you through, understand your supply chain, understand your VAT issues, and really present a compelling option. We also look at domestic and foreign VAT, as well as that third option there is our Retrade Solution, really focusing on import VAT, understanding your T&E and your accounts payable expenses as well. And just a quick brief who we are. Again, just we've got various relationships with the tax offices. Our CEO sits on our board of the International VAT Authority, and really spent the last 20 years understanding, honing, and really refining the ability to offer VAT assistance to businesses.
Thank you, Mark and Simeon, for your presentations. I'm going to launch now our final poll. And we would like to know more about how have you found the movement of goods since 1st January 2021? Just give a minute for everyone to answer. And if you have any questions, please drop them on the Q&A box or on the chat box, and we will answer them shortly when we pass into our Q&A session. Thank you, everyone. We do have that 42% have found moderately difficult and 21% very difficult. We do have a company who finds it too early to say, and just 8% have found it moderately easy. Thank you for your answers. If you can please go on to the next slide. So as you already may know, there is a government support fund for Brexit-related either training or consultancy services. If you're interested in that, we will send the slides later on, so you will be able to find more information. And the next slide, please. And we have some other events and training courses coming up, and our next bite-sized session will be in 2 weeks' time, and that's going to be on rules of origin. Thank you. And now we go on to our Q&A session. We do have a couple of questions already, so we'll start with those.
Should I read them out?
Yeah, if you want to.
Great. And thanks again to the chamber as well for hosting this session again. I think this is the most exciting part, is usually the questions. So I'll read them. I'll probably mostly send it to you. Is first one, I think we are now VAT registered in France and arrange a shipment from a supplier in France to our customer in Ireland. And then just to follow from that is, our supplier in France has issued their invoice with no VAT, showing final destination Ireland. Is this correct? And then we also issued our invoice to our customer in Ireland without VAT. Don't know if you can see the questions as well. Isabel was asking that.
Thank you, Isabel. It's actually very, very related to the point that we were discussing earlier about triangulation. So the reason why your French supplier has issued the invoice with no VAT is because from your question, I assume that the goods are actually moving from France to Ireland. And that is an intra-community acquisition in Ireland, because you essentially become the owner. Well, ownership passes to you when the goods arrive in Ireland, at least from a VAT perspective. And then after that acquisition in Ireland, then you make a subsequent supply to your Irish customer. Now, what happens is that the French supplier has done what is correct. They've zero-rated without French VAT because the acquisition occurs in Ireland. Essentially, what you're supposed to do, even though you have a VAT registration in Ireland, is to register for Irish VAT and account to the Irish tax office for that VAT, because you acquired in Ireland. So the input VAT, your acquisition VAT will be reported to the Irish tax authorities, and then you will, when you make your final sale to your Irish customer, you issue them Irish output VAT under that VAT number that you would have acquired in Ireland. What you should have done, obviously that is not an ideal situation. What should have actually occurred is you should have acquired the goods in France and organized the transport by yourself to Ireland. So essentially, the domestic transaction occurs in France, and then you organize the transport to Ireland. And then in that case, you can use that the principle of Article 40 to reverse charge to your Irish customer. But because I'm assuming the French supplier was the one that did the movement of goods, or at least organized the movement of goods, that movement is attached to the transactions between yourself. Oh, I see this clarification. The transport was arranged by us. Then in that case, they should have charged you French VAT. So that would have been a domestic transaction in France, and then you reverse charge to your Irish customer. So I think you might have to speak to your French suppliers and tell them that this transaction has been done incorrectly. So I think you'll have to have a conversation with them. I hope I answered the question. Thank you, Thotso. It's a pleasure.
I think something on that. I think we see in the industry that's happened quite a lot, that on both sides, either VAT was charged or not charged from the supplier, and having to go back to those suppliers and query that to say that there is an obligation here, that compliance issue isn't necessarily completed properly, because especially on the domestic side, you obviously see a lot of those cases.
Yeah, absolutely. And I think there's another question in the chart. I don't know if you see those one marks.
There we go. So yeah, if you are, Sarah asks, if you are registered for VAT with the fiscal rep in the Netherlands, does this qualify you as company A in the triangulation example, or do you need a physical location in the EU? And then, can triangulation work for rental goods when no change of ownership takes place?
Okay, so I'll start with the second question. Can triangulation work for rental goods? No. And the reason why that is because the term acquisition of goods means acquisition as the owner of the goods, to be able to dispose of the goods as the owner of the goods. But when you do a rental, essentially ownership doesn't transfer. You're only giving them a right to use the goods for a period of time in a particular place. So a rental is more of a service, if we would quote and unquote explain it that way. So triangulation would not work for rental of goods. That's the short answer. To go to the first question, whether you will be company A would determine on where you sit in the supply chain. Company A will always be the originating country from where the goods are sent down the supply chain. So if your business is the originating country, then you don't have to worry about triangulation. All you just need to worry about is whether you're VAT registered in the country of origin. Because if you're VAT registered in the country of origin and the downstream customer is now the EU country, all you just have to do is just zero rate it. And just for fullness of conversation, you don't need a physical location in an EU country to take advantage of the triangulation. In essence, the triangulation benefits, is of most benefits to the intermediate party, the intermediate supplier. If you're company A, then triangulation would not really apply to you. You don't gain any benefit from it because presumably you're VAT registered in that country already. And I think there's a follow-up question that says, we will use a storage and distribution facility in Netherlands for our goods. So essentially, if you already have a storage and distribution facility and you have a VAT number in Netherlands, that's a good thing, because it means that if you're selling to other EU countries, you can reverse charge and you can dispose of the need to register in those countries. Because you're the originating country, triangulation really doesn't provide any sort of advantage for you in that sense, because all you just have to do is reverse charge to your downstream customers if they are VAT registered in other member states. I hope I answered the question.
Simeon, to pick up on the point that you made around for UK businesses, I think, maybe it's a longer conversation that we would have directly with Sarah, but if it's a UK business registered here in the United Kingdom, who has that foreign VAT registration in the Netherlands, if the Netherlands is that originating country, I guess, of the goods, then obviously triangulation wouldn't apply. Is that correct? It would have to be registered Austria or somewhere else.
Yes.
Okay. I think Bucky, I saw you raised your hand. Jalevis, I'm sure that's fine. I mean, if Bucky wanted to either ask the question or comment himself.
Yeah, I'll just allow him to talk. Just 1 second.
Sorry, actually, I was just trying to. Mark was very fast at the beginning, but can move on.
Sorry,
I think we're struggling to. I think there's an issue at the beginning, but we are recording the session, so it will be shared with you. So if you've missed anything, you can obviously go back and listen to it.
I apologize. I also saw my connection did drop very slightly, and sometimes that speeds up. But if there are any clarifications, of course, on this presentation, our contact details are there as well. We'll be very happy to discuss again in one of those consultations. Were there any other questions? If there aren't any other questions from a Q&A perspective on triangulation, on VAT reclaim, on any of the services that VAT IT and Retrade can offer in terms of our one-stop solution, I'd like to just say thank you once again to everyone for attending today, and to the Greater Manchester Chamber of Commerce for hosting this webinar and for allowing us to speak around VAT and triangulation, these topics that are important to us. And hopefully we provided some guidance as well. And I will hand back to Jill Davis.
Thank you, Mark and Simeon, for the presentation. And before we go, I would like to ask everyone to please answer to our feedback poll that should be on your screen now. That will help us improve our sessions as well. And I hope you all enjoyed it. We will be sharing the slides and the recording in the upcoming days. And we'll send a follow-up as well with further information. Please feel free to reach us if you have any questions. Thank you, everyone.